Good afternoon, good morning, good evening. This is Michael from backtothefuturetrading.com, and this is analyzing Netflix. Bum bum. Right now we're going to familiarize you with some of the risk disclaimers as required by the U.S. federal government. You can lose a lot of money trading. Please be aware of the risks, the inherent risks involved. Do not invest money you cannot afford to lose. No guarantees are being made that you will make or lose any money using any of the techniques or methods shown here today. Hypothetical or simulated performance results have certain limitations. Please familiarize yourself with that paragraph. That one's pretty important. Please pause the video here and make sure you read through this page very carefully. Second page has a lot of great stuff too. Whether trading futures, forex, options, or foreign exchange instruments, remember the risks involved are tremendous. Do not trade with money you cannot afford to lose. No representation is being made that any account will or is likely to achieve profits or losses. The information provided in this video is for educational and research purposes only. You should reach out to and work with professional traders or commodity trading advisors whenever possible. Again, familiarize yourself with these disclaimers before we continue, and we appreciate your involvement with that. Stop the music! Alright, let's take a look at Netflix, and I've got 3 different methods here. I'm going to save this workspace. And we'll NFLX review. And when I'm done, I'm going to post the workspace with my chart markings on here so you can open them. And if you're not a NinjaTrader customer, you can simply download the platform for free, and the end of day data for stocks is free as well. So all of my construction lines will be here. I've got 3 different methods in play here. And I want to go over each of the predictive methods on a daily chart with you and show you some things that if you're trading Netflix you might want to keep in mind. When I look at the charts, there are a couple different indicators that seem to be working really well for this tool set. And the one I wanted to show you first is the Flux Daily Cycle Marker Indicator. And the daily cycle marker indicator uses a series of repeating phases in the market to predict what an instrument might do next. So for example, everywhere you see a little green dot is a phase 1, large green dot phase 2, little red dot phase 3, large red dot phase 4. And they repeat ad infinitum into the future. When we take a look at this little guy, one of the things you'll notice is a force being exerted on the market. And there are a lot of things that we can determine from the software based on the forces involved here today. And let me show you what I mean by that. Historically, when there's a phase 2 involved in the Netflix market, that's one of these large green dots. Right? And we'll just put a vertical line on every one of the large green dots. Historically, one of 2 things almost always happens. And by now you've figured out that these dates are the ones where Netflix kind of rockets up. And most of the time, a phase 2 is a buying pressure, especially with trend. It's a point where that signal just causes the market to surge out of a pullback, out of a breakout, and go. And I want you to see, since the election cycle, since November forward, what usually happens from phase 2s to phase 4s. Okay, so most of the time you'll see from here to here it went up $30. From here to here it went up 6. Okay, and I'm just going to work my way up From here to here, it went up 7. From here to here, it went up 15. From here to here, it went down $1. From here to there, it went $7. From here to here, it went 10. Here to here, it had gone 6. And then, as of right now, it has gone 27. Okay, so we'll talk a little bit about this guy in a second, but one of the things I want you to notice with Netflix is the following. The biggest the market has ever moved is here. And this goes back to October of 2016. In recent memory, at a phase 2 event. So now what I'm going to do is just to show you the range of the market at that point was here. October 19th, 2016, the low, to the high, which was here, October 25th, 2016. So I'm just going to carefully get that as close as I can. And the resulting range of that move was $31.21. Okay, you with me so far? So when I look at all of the other exertion levels, anytime the banks push the price of Netflix, it fell into a pretty discrete range. 31 was the outlier, 6.5, 7, 14, 15, 7, 10, 6. So most of the pushes are 7 to 10. And hover around the middle of that histogram would be around $7. Okay, 31 was the outlier. As of right now, this move is as big as the outlier is. And so I'm going to move this across. And I just want you to see two things. Number one, the low, which is right here. And now 31, what was it before? 31.21 approximately. So I'm going to take this and look for 31.21. Pretty close right here, 31.20. And I'm going to put a ray right there. Okay, and that kind of tells me that the most the banks have ever moved before they pulled back, or as high as it got before the next phase 4, is that range. Does that make sense so far? So that's the maximum exertion that we would expect. So before, when it did it, look at what happened from the low to the high of that range. Okay, and then it pulled back from the phase 4 into let's just draw a quick fib here to see. And I think I got this right. Nope. Pull that up. That's where it really was. The fibs looks like if we just put the standard suspects in here, the 58, the 38, and the 62, they came all the way back to the halfway point. Okay, so if they follow that same pattern, if the banks follow the same playbook, then I'm going to bring this up to where we are here. We're kind of anticipating banks getting up on Netflix into the $180 range and then pulling back down into the $165 range, which would align with the prior structure level right here. Okay, so all we're doing here, let me just circle back. I'm looking at all of the phases in the past where we were looking for an up move, and then looking how far it went between the large green dot and the large red dot, the phase 2 and the phase 4, because those are the primary moves here. And the phase 4 is coming in the upper right hand corner according to the system in 5 days. Okay, so 5 days including today, Tuesday, Wednesday, Thursday, Friday, Saturday. So by Monday of next week, we'll have hit the highest that Netflix go. 1, 2, 3, 4, 5 trading days. So we're anticipating being up in the 180 level by Monday of next week, and no higher. And then from that point forward, from the phase 4 forward, from Monday of next week forward, there's a good likelihood that we'll start pulling back down into the 165s, just based off of what the banks have done in this phase in the past. Does that make sense? Okay, now let's talk about this green signal here and this green signal here, because something funny happened on the way to the forum. In my Guide to the Histograms book, and I'll put a link to that in the description as well down below, there are 5 histogram patterns, or 5 timing patterns, that I teach my students. And without getting into the details of it, when we see a higher high at a buying pressure time, we expect the market to invert or go in the opposite direction. Now, this isn't cherry picking, this is a mechanical definition. We don't say after the fact that it happened. We see as it's happening what we anticipate to happen at that time. So I want you to keep that fresh in mind when we look at what happened over here at June 9th. So coming into June 9th, we had a higher high selling pressure time. So accordingly, that's a pattern 5. We're going to give that a red arrow. And the same thing happened over here on February 10th. So whenever we have a higher high green dot on either candles 1, 2, or 3, those signals, like right here, get a red dot. And so this was an inverted signal. We were expecting the market to drop at that point. Now, take a look at this with me, would you? Ordinarily, the phase 3 signals, I'm going to get rid of all these signals right here. Ordinarily, all the phase 3 signals, the little red dots, get obeyed. Look at what I mean by that. Ready? When there's a phase 3, the market drops. I'll change the color of the arrow here so you know what I'm talking about. Normally, when it's time for the banks to sell, there's a minor retracement, or the market goes sideways, goes into congestion, like right here, phase 3. Look at what happens when there's a phase 3 that gets burst through. So right here, for example, on January 19th, this red dot gets punctuated, gets pierced, and it continues. But the next day was the climax day. You see what I mean by that? This is what we were expecting, selling pressure or consolidation, and somebody went, no, it's going higher, turd buckets, and then they push it up. That one climax day that throws everybody off. And then the market is established in a range after that. Okay, so I'm just going to draw the range from the low to the high. And you see how it's kind of unsustainable to grow after that? It kind of just stays inside of that range for a while until the next phase 2. Well, oddly enough, that doesn't happen ever again until today. Meaning, it didn't happen on the next phase 3 pushed down. It didn't happen on the next phase 3 pushed down. It didn't happen on the next phase 3, the phase 3 pushed down. It didn't happen on the next phase 3, the phase 3 pushed down and stayed down. It didn't happen on the next phase 3, the phase 3 went sideways and then it fell. And then this is the only other time since 2016 that the banks blew through this level purposefully. And if you don't believe banks manipulate stocks, I've got a bridge I want to sell you in some landlocked state. So this is one of 2 times in recent memory that the banks have pushed the value of a stock in another direction. And when they do you see how it was kind of unsustainable? It stayed here from January 20th all the way through, more or less, until April 25th. Now, I'm not an options trader and I don't know much about puts or calls, but it seems to me like there's a potential here if you look at that past behavior pattern. So one of the things we probably want to key in on, we already know where the low is over here. I'm guessing just applying that research. Matter of fact, let's just take the box from over here where their range was defined by, and let's just copy it. And you see what happens when I put it over here? We already know the low of today. The low of the day today was 174.20 something. But look at what happens when I put that range from over here. Same thing going on over here, over there. So with Netflix right now, we're sort of seeing where the range is going to be, at least up into and through the next phase 4 kicking in on Monday of next week. All right. So that stated, it looks like over the next 4 days there are buyback opportunities or pullback opportunities down into the low of today where things are going to kind of migrate. In fact, one of the things you want to keep a look at is the 50% of that range turns out to be buying pressure. So it gets up to the 50% of that range, falls back to the low. So whatever the range of today is, look for a midpoint of that range, and there will be buys and sells off of that midpoint, potentially going forward into the future. So we've kind of sucked the life out of the daily cycle marker indicator program here. And if you don't have this tool, it's pretty spectacular. And again, we already know when the next phase 4 is coming, so it's very predictive. So let's see what else we can discover using another tool. This tool is very similar to the daily cycle marker tool, but it's based on a different mechanism. It's based on a different predictive algorithm. And one of the things I want you to see is the following. This one is called the Flux Orion. And the Flux Orion has 2 signals as compared to 4 that are constantly cycling. And I want you to see what usually happens on a selling pressure phase and what usually happens on a buying pressure phase, right? So there's generally some kind of movement. And then every once in a while, things go backwards, just like the other indicator. It's usually normal most of the time. Excuse me. And then every once in a while, things get a little wonky and they flip. The image flips. It's a reverse mirror image. But I wanted you to see that the majority of the time, the thing that we're waiting for actually occurs, up to and including this guy over here. Okay, but now, remember that higher high sequence that I told you about? That green dot, higher high? We have another version of that in the Flux Orion, or we have another iteration of that, I should say. So there's the prior swing high, and then candle 2 is good, candle number 3 is a higher high, and then it drops down. So in my class, I would tell my students that's a pattern 5. Okay? This one here is a pattern 4. Let me show you what I mean by that. We were anticipating the market to reverse and go up because of the conditions of a pattern 4 setup. Let me show you what I mean. Boom. Make that a little smaller. So when we have the market falling into a lower low, either candle 1, 2, or 3 of a selling pressure time, we're anticipating the banks to push the market in the other direction. So right here, obvious swing low matches this perfectly. The anticipated move looks like this. This is from a book I made 2 years ago, and you can see that this pattern plays out identically to what we were expecting here. So great opportunity at the trend line, options for calls at this point, and I'm just going to put the pattern 4 green arrows there across all three of those signals. So this kind of tells me or reassures me that the market predictions that are coming off of these phases are correct. Meaning the things I'm expecting it to do are happening most of the time at these times. So what it causes me to look for is the next prediction. And in the upper right hand corner it tells me for Netflix 2 days, 13 hours, and 35 minutes from now we have a P event or another green dot. Okay? And so one of the things we can notice from that is the cycle started here and it's been going backwards the entire direction up. Well, everything that has a beginning has a what? Everything that has a beginning has an end. And so I'm expecting that end to occur in 2 days. But remember, we just did a whole analysis over here with the other tool, and we were saying that today was kind of the end of the Netflix push up, potentially. So as we come into the high of this range, up towards the 180 mark, over the next day or two, we're expecting things to peter out, and we're going to have another version of what? Of this thing. Do you see how we're moving into that higher high green dot? And when we see those, this is usually what it does. And you see how that pattern on the left is kind of matching what we're seeing on Netflix right now? So there's sort of two things telling us that this is going to peter out a little bit. Okay, now let me show you one technique that Gann taught me with regards to support and resistance in terms of what I'm anticipating. There are no higher highs, or there are no resistance levels here. Matter of fact, let me turn these resistance levels on for the Orion, and we'll just extend these to the right. The closing prices of these dates, according to Gann, if the time cycle analysis is correct, the closing prices of these will be support and resistance for the market. And they are. If you take a screenshot of this and go back and look at every place this market bounced, there was considerable support and resistance at those levels. But something, again, wonky happened right here. And we have a great idea where it's headed and where it's going to stop. But is there any other way to reinforce that? And there are, in fact, a couple ways to see. One of the ways involves a rule that I teach about time resistance. And so we're going to focus primarily right now on these two resistance lines because they're the last ones. They're the last Mohicans. And here's what I want to show you. I'm going to take a fib retracement from these last two lines, but not in a conventional way. In fact, I'm going to do minus 100, minus 200, minus 300, minus 400, minus 500, and then minus 600. I'm just going to keep repeating that gap over and over again. And you see how we're creating a stairway? We're repeating the last known support and resistance gap. And this is a very cool technique to use because I see it work a lot. And when I extend that off to the left, I want you to sort of see where the levels are that we're watching. Remember where we drew this blue line up here at the $31 move, 31.21? Well, there's resistance, initial resistance at 178.41. There's support at 175.85. And then there's big resistance again up here at 180.97 or 181, depending on how you round it. So there are two levels here that are particularly important to Netflix. And I'm going to leave these lines on my chart moving forward. So again, as we come into the next 2 days, the two places I expect resistance to be, and let's see if I can get this green box on all of the charts. Okay, there's the range we were expecting based on the last phase 3 breach. This is the resistance line we were expecting based off of the last $31.21 move. And then this 600% repetition of the last known resistance level is lining up all in this area. Okay, so 180.60 into 181 tends to be sort of the end of the road here, where banks sort of throw their hands up and say, you guys figure it out for a while. Does that make sense? Okay, so that's sort of technique number 2 with Netflix, and I'm going to leave those construction lines up there. Technique number 3, I want to show you something unique to this market, and if you trade Netflix, these lines will be very important to you. So far, so good. Awesome sauce. NFLX. Free data from NinjaTrader. Thank you, NinjaTrader. Hit OK. There's our stuff. Bada bing, bada boom. And we've got those lines from our other charts on here. Now, this one's going to hurt your head a little bit, but I want you to trust me just a little bit. In fact, come back over and take a look at this with me. Ready? When you look at the very first move in Netflix, when it started to get some traction here after the IPO, I guess, you'll see that it was in a steady trend climb here. And I've drawn a trend line here, and I want you to see, do you notice how it kind of follows along that trend line right there? We get those multiple touches and those kind of to the tick, to the tick, to the tick, to the tick kind of reactions. If you weren't paying attention, you might have missed it, but you can also sort of connect all these highs, and what you'll find is that every market has an angle that is unique to that market. So for example, if I take this line and I move it over to the right, you'll notice that I can connect. See how these highs are sort of hitting that line as we go and moving away and moving away and moving away. And then here it touches it to the tick, touches it to the tick, and kind of bounces off and away. And now up here it pulls back to it and pulls back to it and pulls back to it. These lines tend to become anchor lines. And each market has a unique resonant angle. If no one's taught you that before, I'm sorry, but they were holding out on you, and now you need to know. And you can see that when you establish the anchor line, you'll catch all of these little moves along the way. And when you have a prior swing low, you just need to copy and paste that anchor line, and you'll see as the market rises and puts in these new lows, do you see all along the way how that angle is so relevant? And I'm just using that same line back in 2011, and it'll channel inside of that line right there, and these little lines right there, and wherever it puts in highs and lows in the past are important to where it goes in the future. And I have some techniques on how to figure out where it's going when there are no new lows and no new highs. So does that make sense so far? Okay, now I want you to see this. Ready? This is when Netflix started. I'm going to take this line and I'm going to connect as many highs as I can. So like right there is a high, a series of highs. Yep, so they're being touched to the tick along there, and then I'm going to put one more line to connect these highs right there. Does that make sense? So these two lines are special because they're way back in the beginning. We'll make those fuchsia. Okay, now check this out. Can you see where we are right now with regards to those three lines? These are the original Netflix. The original flavor. trend lines going all the way back. Pink, pink, blue. Remember? Pink, pink, blue. Pink, pink, blue. All the way back from here in 2011. I want you to see where we are. Remember, what happens when we touch these lines? You see them? Dink, dink, dink. Bouncing like a pinball, right? Back and forth between them. Okay, and I didn't draw the ones from down below here yet, but if we copied and pasted these, take a look. Shazam. 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 Bazinga. So I'm just basically putting lines at every one of these highs from now to follow. But now, the original three, look at them. You see where this bottom one kicks in? That's the highest level from back in 2011. And that line right now puts us at 182. So if you look at all three of these analyses, we're coming to an important crossroads here across those three different techniques, using the resonant angle line, using the daily cycle marker tool, and then using the Orion indicator here, telling us that we're kind of, in the next 2 to 5 days, we're expecting a sell-off in Netflix, or at the very least, the market to consolidate for a really long time, bouncing back and forth in whatever the range, 50%, the low and the high of this range bar will pretty much dominate if that old cycle continues. That's all I got on this. There's a few more techniques that I can use, but if you're interested in learning more, I'd love for you to do one of several different things. One, if this video is useful for you, please like and subscribe and comment down in the YouTube section below. That helps us get found and helps you get the information you need. You can also email me, Michael at backtothefuturetrading.com, and I'd be happy to look at a different stock for you or another instrument and help you see what's going on with regards to repeating bank patterns. You can also visit us at backtothefuturetrading.com, and our website there is pretty informative with regards to the kinds of information that we provide. We also have a live video demo that meets, or rather a live webinar that meets every Thursday and Friday, where we have opportunities for people to get together and see these things playing out in the markets that they trade. And we'll be happy to work with you there. Let's see what happens in Netflix. You guys know what I know. Hopefully it gives you some ideas, some research ideas to pursue, and we'll go and see from there. Michael with backtothefuturetrading.com, signing out.